Welcome back to another episode of the Rogue Agent Answers. Today's question, should you have a disability waiver of premium on your life insurance policy? A great question. Disability waiver of premium waives the premium due on your policy if you become totally disabled. It's for the insured person on the life insurance policy, so it only applies. This only comes up, and the reason I mention that is because there are times when a policy owner is not the same as the person that's insured under the policy. So, for example, if like a mom or dad buys a policy on their child, the disability waiver would only apply theoretically to the child. And some carriers do have provisions for policy owner disability waivers, but those are a little different than just a standard disability waiver. Most of the time, it's just applying on the person insured in the policy. And so, if you're both the insured and the policyholder, then it's a moot point. But if you become totally disabled, then your disability waiver is triggered, and the insurance company pays that premium for you. However, if you are the policy owner but not the insured, as I said, it would only be triggered if the insured were to become totally disabled. There's a couple different ways to define disability. Insurers can use either what they call an own occupation definition of disability, or any occupation definition of disability. So an own occupation means that if you become disabled and can't do the work that you were doing, like your chosen occupation, your chosen profession or whatever. So if you were like an airline pilot and you became disabled and for whatever reason you can't fly planes anymore, then that would count as a disability. Any occupation means that you can't do any job. So if you can't fly planes, but you can flip hamburgers or something, then you don't, under those disability rules, you don't qualify for disability, right? So that's something to know and something maybe to ask about, how the insurance company looks at disability, because they can look at it one of two ways. One is a lot more generous if you can get your own occupation, where is a more generous and I guess I would think of it as being more practical, as people tend to think of, if I'm disabled, I can't do my job, right? Not just that I could take a different job, but I don't. This is something that has absolutely nothing to do with what I do or am interested in. But so own occupation is generally considered to be like the preferred definition for disability. And then you want to know what's meant by total disability, because insurance companies have different definitions. As one definition, some insurance companies will use a definition that goes something like, I'll just read it as an example from a sample insurance policy. So total disability, as used in this rider, total disability of the insured means an incapacity of the insured, which, quote, results from bodily injury or disease. And also one, during the first 24 months of total disability, the insured is unable to perform substantial and material duties of their job due to sickness or accidental bodily injury. And number two, after the first 24 months of total disability, the insured, due to sickness or accidental bodily injury, is unable to perform any of the substantial and material duties of any job for which they become reasonably suited by education, training, or experience. So you can, and those specifics are going to change. So some are going to be, it might be the first 12 months, maybe 24, it might be, less or more, or whatever. Different companies are going to have maybe slightly different terms in there, but that's, as an example, that's how they would read. Either way, the maximum issue age for disability waivers in general are going to be up to age 50 to 55. Some of them will take it up to 65, depending on the insurance company. So once you become totally disabled, you file a claim with the insurance company, and then the insurance company will generally consider a valid claim to be one where the rider is in force at the time of disability, and a disability that has lasted for 6 continuous months. And once disability is confirmed, then the insurer will then waive the premiums or pay, depending on the rider. You have to read the rider. It waives the premiums, or they'll pay the premiums due on the policy until your disability ends. In a whole life policy, it basically means they're going to be paying the premiums because the premiums have to be paid. In a UL, it could be that they just waive the charges, or they put in money for you. In other words, they're paying the premium for you. But a lot of times in UL, they'll just waive the charges for you. On a whole life, they will actually pay the premiums for you because they have to be paid. On a whole life, it's a guaranteed premium that has to be paid. So, so once the disability is confirmed, the insurance company waives the premiums due on the policy until your disability ends. Again, to a max age of 65, whichever comes first. So that is generally how they work. As an example, let's see. Let me take a look at a sample insurance policy here. So here's a sample verbiage from what you might find in an actual insurance contract. So and this is just a sample. Again, this may or may not apply to your specific policy, but just as a sample, as an example, this is a sample insurance policy from a carrier. A quote: the premiums will be waived as follows. 1, if the total disability of the insured begins prior to the anniversary of this policy, which is nearest to the insured's 60th birthday, the premiums will be waived during the continuance of the disability. Number 2, if the total disability of the insured begins on or after the anniversary of this policy, which is nearest to the insured's 60th birthday, the premiums will be waived during the continuance of the disability until the anniversary of this policy, which is nearest to the insured's 65th birthday, or if longer, during the first 2 years after the date that the disability begins. So that sort of, again, that verbiage might change from carrier to carrier, and you'd have to look specifically at your contract, but that's a sample of what you would find in a disability waiver provision. Some exceptions, insurance companies are going to have, most insurance companies are going to have exceptions. There's going to be what they call risks not assumed. So some of the exceptions are suicide, so any attempt at suicide or intentionally self-inflicted injury while sane or insane, and then a war exclusion, so a war, an active war, while the insured is in the military, naval, or air force of any country, group, or group of countries or international organization, or see active participation in a riot, insurrection, or terrorist activity, or committing or attempting to commit a felony, or the voluntary intake or use by any means of any drug, including but not limited to a controlled substance, unless prescribed or administered by a physician and taken in accordance with the physician's instructions, or voluntary intake or use by any means of poison, gas, or fumes, unless a direct result of an occupational accident, the use of any intoxicant, or the participation in an illegal occupation or activity. So there are exceptions and exclusions, but those are pretty extreme. Basically, if you're not doing anything illegal, or if you're not doing it intentionally, then you would qualify. Is kind of what they're trying to get at there. And carriers don't want to be responsible for something that you do intentionally, right? It's the question then, coming back to the question, should you have the disability? It's a nice thing to have if you can afford it, and if you think that there's a risk of disability there, that maybe you might end up using it at some point. I mean, nobody wants to be disabled, but for some people, they kind of know that there's certain risks that go along with either their profession or just their life. That's a decision you'd have to make. It can be a good waiver. It does cost a little bit of extra money, not a lot, but it does cost extra. In general, it's not something that I generally include on a policy unless somebody is making premiums and kind of, if somebody's making premiums and it's clear that, like, based on their profession or their job or something, that they would benefit from something like that. If somebody is making, let's say 5 scheduled annual premiums and they don't intend to keep making the annual premiums, going to be like paid up after 5 years, essentially, it's probably not worth having on the policy, especially if they have a big lump sum of money that they're putting in, and the rest of the premiums are basically going to be coming out of income, and the policy can sort of fund itself after that. Then it may not be worthwhile because you just wouldn't need it. Even if you became disabled, the policy could be either pay for itself or it would be reduced paid in full. So for some policyholders, it makes sense. At least for the first 5 years, as the cash values build up until the policy can kind of fund itself with its internal values. And then what some policyholders will do is they'll have it for the first few years and then drop the waiver as soon as the policy has enough accumulated dividends, so that those dividends could support the policy indefinitely. Otherwise, a waiver of premium is probably not necessary. So it just depends. It depends on how the policy was designed, how much cash value is in there, what your planned premiums are, the source of the premiums, and so on and so forth, and of course your risk of disability.